Hi everyone, I got brand new scenarios to show you on the lower time frames, but I first have to explain the medium time frame perspective to help you understand what I'm looking for on the lower time frame. So this, what you see right now, is the last impulse, and it is a 5-wave structure in a 1, 2, 3, 4, 5. Now it's quite unique because in this scenario wave 1 is extended and not wave 3 as is most common. So because wave 1 is extended, the targets for a 2, 3, 4 and 5 change compared to the usual impulsive structure where wave 3 is extended. The most common target now for a wave 2 is in between these fips, the 236 and the 382. Wave 3 does not have a target. Wave 4 most common target is between the 236 and the 382 as well. And the most common target for a wave 5, if wave 1 is extended, is between the 0.618 and the 0.786, pulled from the low of 1 to the high of 1 to the low of 2 with the trend-based fib extension tool. Now in this scenario, for me, it's very likely this is the high of wave 5, a nice wick in this area, and after that we started to range, which I believe is the beginning of a corrective structure. So the potential trading setup we had was entering shorts in this area for this scenario, stop loss above, trading it to the downside. By now, the stop loss most likely is at break even, because also in my other scenario, I do think price is going to go to the upside to test these resistance areas over here, weekly naked point of control and a weekly around 30k. And also price has not been dropping very quickly, so it's also just a safe option, because what I'm actually looking for is something like this at the moment. This is a scenario I do keep a close eye on. So we have the end of wave 5, which in a very bullish scenario means that this is a 1, 2 and then another 1, 2 before then a massive 3 to the upside. The more bearish scenario is that we continue to the downside, of course. But what I'm looking for, most interesting, is the corrective structure over here. Now what you see is a bars pattern, which you can find over here. It's bars pattern. And what you can do is you can copy bits and pieces from the chart and then try to overlay it on the current price action. As you can see, I can move it as well. Now in this scenario, what is interesting is what is going on over here on the lower time frames made me think of this scenario over here, where we have basically an expanding flat to start with. So we have a 3-wave structure over here, followed then by a 3-wave structure up, which is then also hitting the 30k resistance area before then a move down. So this beginning structure is an ABC expanding flat, with the most common target for wave B and an expanding flat being the 1.236 and the 1.38 fib, taken from the high of 5 to then the low that we made over here with the current price action, which also has nice confluence with the yellow lines that you see, the naked point of control and the weekly. Then you get a wave C to the downside, range a little bit over here, and then eventually a continuation to the downside. And this would also work very nicely with the target boxes that I have to find support over here on the blue one, move up to the resistance area over here where you see my blue target box, then go to the downside and land on my target box over here, which is basically between 24.850 and 24.3k. Then range a little bit, and then eventually drop to the downside, where the most common targets for a wave 2 Fibonacci wise are between the 0.5 and the 0.786, pulled from the low over here to the high of this wave 1. But by far the most common target for wave 2 is the golden pocket, having nice confluence with this target box over here, as you can see, between 22.6k and 21.8k. So this is something I'm looking for. So basically what I would like to see is another move to the upside to test the 30k area. If we then go to the lower time frames and deep dive into what you now know is the medium time frame scenario that I'm looking for, this is what I'm looking at. This is the first scenario, which I also explained in my previous videos. So over here we have a WXY, a 3-wave structure, which is the first part of the 3-wave structure. So this is a wave A. So we have 3 waves in A. We had a nice potential long setup over here, entering inside this box, stop loss below these lows, trading it then to the upside, where one could have the target of B, but most likely already had to take profit in. Stop loss should most likely be at break even already in this particular scenario, just in case, you never know, price is going to go to the downside, and I do have a scenario for that as well, which I'll show you in a second. So yeah, currently then we are looking for 3 waves in B, because we have 3 waves in A and an expanding flat in like an A, B, C. Wave C is an impulsive structure, 5 waves to the downside. But a wave B needs to be a 3-wave structure. So just like wave A is 3 waves, wave B needs to be 3 waves as well. Now, after the three waves, they should end around the most common target for the wave B, as mentioned, the 1.236 and the 1.38, before then a move to the downside, where the potential trading setup is to ladder the shorts over here. Stop loss above the 1.618, which is a rare target for a wave B expanded flat, and then trading it to the downside. And currently, as it looks now, this is a nice three-wave structure. We are now on road, well, basically going to the downside, and there's a couple of scenarios that can play out, which include taking this wick as well before then moving to the upside for then potentially the wave B. Now, if you go to my second scenario I like to show you, I want to show you this one. So let me be clear. In this scenario, the low of wave Y is most likely not going to get taken, and we continue to the upside. So we have this then being a WXY, which I'll show with the micro counts. But in this scenario, we do take the lows of wave Y over here. So we have a WXY, then this three-wave structure is an X, and then we have another three-wave structure in a wave Z. And the reason I came up with this scenario is because we did not yet reach or hit this target box over here. We didn't hit the target box between 27.162 and 26.9K, which is usually something I don't really like. So we had a bounce over here for wave Y, yes, but it actually missed out on hitting the target box. So in a WXYXZ, wave Y, most common target, and actually the only target really for a wave Y in a WXYXZ, is the 1-to-1 taken from the high to the low of W to then the high of wave X. And as you can see, it has been hit and very nicely respected. Then a three-wave move to the upside, which could be this wave X over here, before we now get a three-wave move eventually to the downside, where the most common target for wave Z is between the 1 and the 1.236, also below wave Y over here. And in this scenario, price would hit the target box for then potentially laddering the longs with the trading setup in this area, stop loss below these lows, and then trading it to the upside for the resistance area over here of 30K. So this is just a scenario to keep in mind, and we have to see what price is going to do here on the lower time frame. So if we then go to the micro to have a little bit of a look on what happened in the lower time frames, you can see that we had a nice three-wave move to the upside, as explained in my previous video. It hit the targets, and I mentioned it's very likely we have downside to come, also because of the bearish scenarios that we're playing over here locally. If I zoom in just a little bit, you can see we made a high over here. This is the AGGR chart. You can find it in my Discord, the link. So we made a high over here, and then we made lower highs. Also this one, still a lower high, so we made lower highs, but as you can clearly see, both the blue and the yellow line are making higher highs. That is a bearish CVD after hitting the target area for the high over here with the zigzag that we had. So that was actually pretty nice for then the potential short setup over here, stop loss above the high, because that is the invalidation for a CVD type of trade as well. And then trading it to the downside, where the target box that I put on my chart throughout the day, you can, by the way, follow my chart and everything live, link in the description. The target box I got over here between 27,870 and 27,755 has a couple of confluences. It actually just got hit over here, or at least the golden pocket at the end of daily over here, or the daily isn't hit, but the golden pocket is hit. So there were a couple of nice confluences in this area, which can be at least a little bit of a long trade, because in this particular scenario that I have on the chart right now, we have a WXY, and the remaining most common targets for a wave X are these fibs over here. Now the golden pocket also for a wave X is usually the most common target for a wave X. However, trading a wave X is very, very difficult, because this is a three-wave structure, which means Elliott Wave wise, we now have two scenarios that could play out. We have a WXY, but we also have an ABC. Three waves in A, three waves in B, and then go up for C. So we're getting a flat. So this is a flat scenario, while this is a complex scenario. This is a WXY, where we are not going to take the low over here, but because this is a three-wave structure up, this is also a scenario we have to keep in mind, because in this case, this is a three-wave up, expecting a three-wave down for B, hitting this target box before then moving to the upside. So you can see that the trades I show you on a lower time frame, there's a couple of trades that are basically the same, because the WXYXZ trade over here is exactly the same as this micro trade. or the micro time frame over here trade, these are the same as well. And if I show you this trade, or actually this scenario over here, this was a long setup, and I actually don't think the micro, no, this is too zoomed in, but at least the other two have nice confluence with the trades as well. But that does mean that the potential long setup over here is very, very valid, right? It's valid for a potential Elliott Wave scenario, long setup over here. This is a valid trading scenario. However, one should keep in mind that this wave X or this over here might not be the low for the structure that we are going to form. Now in this scenario, longs can be laddered, stop loss below, and then trading it to the upside. However, looking at how price is going down at the moment, this looks to be, at the moment, quite impulsive, like a 1, 2, this can then be a 3, expecting a bit of a range for a 4, and then maybe a 5, which then could end an A wave, followed by a B wave, and then another C wave to the downside, so that this scenario might actually be in play. Because then we create a 5, 3, 5 type of move in this second part. I hope I'm not going over too complex stuff over here, trying to explain it as good as possible. So of course there's multiple scenarios at the moment, which I just really like to show you because they're all likely on the micro time frame here as well. So yeah, this is what I wanted to show you in this video. Summarized, we have this long setup over here, most likely stop loss break even, profits are very likely to be taken at least partly over here as well because of the bearish divergences and what I mentioned in my morning update with potential downside to come. We have the WXYXZ, which is a more rare scenario, I should say, with then the potential trading setup long hitting this target box over here, which would be nice. Stop loss clearly below these lows over here, because below these lows also there's not much support, and the next target box I have is at 24,850, so that is quite a drop, to be honest. Then we have a micro scenario 1, where we had the short setup over here, very nice indeed. First target for this short setup is definitely wave X, where one could of course close it in case wave X is going to be your target. So yeah, very nice. And then for a wave X, we do not expect this low to be taken, so for the potential long setup, it's basically having the stop loss below the low over there, trading it to the upside for a wave Y. And then finally, we have this microseconds scenario, where this is a wave A, looking for a wave B to the downside, hitting this target box before then a move to the upside. And I think these 4 scenarios are definitely worth keeping an eye on, so you can replay this video to go over these different scenarios as well. I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.